This is the Failure Archive. Today, we're counting down $12 billion disasters and the single bad decisions that made them inevitable. Number 12, Juicero. The $400 juicer. Silicon Valley looked at squeezing juice and said, what if we make it harder and charge more? A Wi-Fi connected machine built to squeeze $6 pouches people could crush by hand on camera in seconds. Investors poured over $100 million into it. The internet poured out memes. One viral video of someone squeezing the pouch by hand did more damage than any competitor ever could. It didn't fail quietly, it failed in public, on YouTube. If your innovation doesn't actually make life better, the market won't just ignore you. It will turn you into a joke. Number 11. Toys R Us. The retailer buried by its own debt. For decades, this was where childhood lived. Aisles of plastic dreams, bikes, action figures, and parents saying, hey, put it back. Then private equity arrived and said, what if we buy nostalgia with debt, billions in leverage, little investment in the future, while Amazon quietly became the new toy aisle of the world? As stores closed, many employees learned their jobs were gone. From headlines and locked doors, nostalgia can fill your memories. It cannot service your loans. In number 10, Borders. The bookstore that gave Amazon the keys to its own customers. Here's the lesson before the logo. Never outsource your future to the company that plans to replace you. In the early 2000s, Borders handed its online store to Amazon. As in, you handle that internet fad for us. Amazon learned the shoppers. Borders lost the habit. By the time Borders realized Amazon wasn't a partner but the main event, it was already too late. Borders filed for bankruptcy in 2011. Amazon kept the customers. Sometimes you don't get disrupted. Sometimes you help set up your own replacement. Number 9. Pan Am. The airline that defined glamour then disappeared. Flying Pan Am once meant white gloves, crystal glasses, and the feeling that the future had already arrived. It wasn't just a flight. It was a status symbol. But jets got cheaper, fuel prices spiked, regulation loosened, and the Lockerbie bombing shattered trust while exposing how fragile the company really was. In 1991, the Blue Globe logo came down and never went back up. The brand lived on in memories and movie props. The balance sheet didn't. Prestige is powerful marketing. It is not a business model. Number 8. Arthur Andersen. One of the big 5 accounting firms whose one job was to say no when the numbers didn't add up. Instead, they said, sure, looks fine, and signed off on Enron's fantasy profits. When Enron imploded, 85,000 Andersen employees watched a century-old firm evaporate, many finding out from the news that their employer no longer existed. They didn't just lose a client. They lost their license to operate. If you trade integrity for fees, you are betting your entire future on someone else's lie. Number 7. WorldCom. When profit turned into theater. On paper, WorldCom was a telecom giant with beautiful, ever-rising earnings. Quarter after quarter, the numbers always seemed perfect. Behind the scenes, executives inflated profits by billions, booking ordinary costs as investments and hoping no one read the fine print. When the truth surfaced, it became the largest bankruptcy in U.S. history at the time. Shareholders were wiped out. Employees watched retirement plans shrink into spare change. When your financials become a performance, bankruptcy is just the final act. Number 6. Wirecard. Europe's fintech miracle that mostly existed in PowerPoint. For years, it was pitched as Europe's answer to Silicon Valley, confident executives, glossy decks, soaring stock price. Critics, whistleblowers, and reporters asked the same annoying question. Where is the money? For just as many years, they were brushed off as haters who didn't get it. Then Wirecard finally admitted that 1.9 billion euros on its balance sheet simply wasn't there. Not delayed, not misplaced. Imaginary. Investors didn't just lose money. They lost trust in everyone who told them to stop asking questions. If your story needs blind faith to work, it isn't innovation. It's a magic trick waiting to fail. Number 5. WeWork. The cult of community with a $47 billion valuation. It called itself a movement, a lifestyle, a revolution in how we work and live. Underneath the mission statements, it was still renting office space by the desk. Then the IPO paperwork came out, and suddenly, the story met the spreadsheet. Self-dealing, huge losses. A business model that only worked when reality was ignored. Investors bolted. The valuation collapsed. We turned into fun, expensive offices with inspirational quotes on the wall. Branding can make you famous. It cannot make unprofitable math work forever. Now we move into the failures that didn't just kill companies, they shook the system. Number 4, Theranos. The promise that never existed. One drop of blood, hundreds of tests, a medical revolution, if it had worked. Inside Walgreens stores, real patients trusted results from machines that couldn't deliver accurate data. Doctors and patients made decisions based on numbers that were never real. The story was flawless. The science was fictional. Careers, reputations, and billions of dollars were built on readings the technology simply couldn't produce. A beautiful lie can raise money, win magazine covers, and impress powerful people. But in medicine, if the data is wrong, nothing else matters. Number 3. Lehman Brothers. The collapse that shook the world. A 158-year-old bank stuffed with mortgage securities it barely understood. When the housing bubble burst, those safe assets turned into anchors. Lehman went hunting for a bailout, a buyer, a miracle. None arrived. In 2008, it filed for bankruptcy, with more than $600 billion in assets and obligations spread across the entire system. Markets panicked, pensions cracked, homes were lost. When a pillar falls, it's never just the pillar that breaks. Number 2. Enron. The greatest corporate illusion ever built. To the outside world, Enron was the future of energy. Innovative, unstoppable, adored by Wall Street. Behind the curtain, executives hid billions in debt inside shell companies, moving losses off the books and calling it creativity. Employees loaded their retirement savings into Enron stock. Executives cashed out at the top and smiled for the cameras. When the truth finally hit, the stock became almost worthless, and thousands of futures evaporated with it. If your numbers only work in the dark, you're not building a company, you're building a countdown. And at number 1, FTX. The fall of modern trust. A crypto exchange sold as the responsible adult in the room. Celebrities vouched for it. Politicians welcomed it. Millions parked their savings there, told they'd found the safest place in a risky world. Behind the screen, customer deposits were quietly funneled into a hedge fund to cover massive trading losses. Then the market turned. Withdrawals froze. People refreshed their accounts over and over, watching balances on the screen that would never become money again. Around $8 billion vanished between the spreadsheet and reality. In a system built on code and math, trust is still the only real currency. Once that breaks, everything else goes with it. These weren't just balance sheets. They were jobs, retirements, homes, lives. This is the Failure Archive. Subscribe and learn from the fallen.